Okay, we don't have time for a break, so let's straight away go to the markets and to our market master of the day, Anup Maheshwari, Executive Vice President and Head of Equities at DSP BlackRock Investment Managers, joins in. Good morning, Anup. Pleasure having you with us after a long gap, I should think. First up on the markets itself, do you think the markets have reached a level where you are uncomfortable with valuations?
Well, it depends on your time frame of investing, Lata. I think over the next 2-3 years, we're still very comfortable. I think in another 6 months or so, we'll be rolling over to FY16 numbers. If you look at FY16, the market doesn't look as expensive as it does on FY15. So it's really the time frame that you're looking at from an investment standpoint. And what we're really saying to investors at the moment is take a 2 to 3 year view. We are in a cycle where earnings will hopefully surprise positively rather than disappoint, as we've seen over the last 3 to 4 years, because there is a big shift in sentiment in corporate confidence as well. So let the valuations, unless they get really stretched in the very short run, I think the whole idea is to pretty much participate with the earnings growth that will come through over the next 2 to 3 years, which should be quite positive. So from that perspective, I think this market is pretty reasonably valued actually.
All right. Anup, hi, good morning. I know you don't like to talk stocks, but there is a big development that has taken place, just half an hour back with Vishal Sikka being appointed as the CEO of Infosys. How would you react to a news flow like that, especially because there was so much uncertainty with respect to the company for the last many weeks and months?
Yeah, I'll try and give you a very generic answer to this because, at the end of the day, any management change does tend to be very impactful for companies. We've seen this time and again. In this particular case, we'll have to wait and watch and see for a while in terms of the ability to deliver, especially with companies that have faced a lot of senior management changes more recently. I think a new person coming in will take some time to settle down. So I think we need to, sort of give it some time. It's very difficult to sort of react immediately with a very strong view either way. But net, it is positive in the sense that you are getting, a new person in who's had, a fair amount of success overseas, and net should be a positive for the company. Typically, management changes, if you get the right person in, can make a big difference eventually.
Okay, this ticker flashing across you is because United Bank had named Vijay Mallya and United Breweries as a willful defaulter for the loans given to Kingfisher, and that is the clarification coming from United Bank sources that they will give Mr. Vijay Mallya a chance to present his case. Mallya had written to United Bank to not declare him a willful defaulter. Well, to continue with that theme, Anup, what would be your attitude to IT stocks in general? We have seen a comeback trade in these stocks in the past 48, 36 hours. But for a 36-month frame, how would you put an incremental 100 rupees to work? How much would be IT?
For IT stocks, we tend to take it 1 year at a time. I think the thing is, at the end of the day, it is also a cyclical sector in a way, largely dependent on what's happening overseas and how corporate spend is overseas as well. Right now, it looks like things are reasonably okay. Companies are spending. There's no problem from a business point of view, and valuations are clearly below or pretty much at the lowest point for quite some time now. So that combination is pretty good. So for the time being, I think IT does look interesting. But we'll keep revisiting this year to year, literally. Over a 3-year time frame, one would like to think that these companies will obviously grow a lot more. But structurally, one has to just see where effectively the ROEs settle down on these companies. So ROEs are still quite high in the IT sector. But they have been gradually declining pretty much across, and that's also partly affected their valuations. So at the moment, I think they're pretty much at the lower end of their valuation range, so there is upside. But a 3-year view is a little difficult to take, and there will be tactical points along the way.
So for the moment, what, you would give them 10% of your investments?
Sorry?
For the moment, how much of your investments would IT form?
At this point, we're marginally overweight what the index weight is. So the index weight is about 12%, we're a little above that.
I'm very interested in the relaunch of the DSP BlackRock Tiger fund, Anup. Can you just tell us a little more about that and what you see as the prospects, what is within that fund in terms of sector allocation, etc.?
Sure. It's not really a relaunch. I think you're seeing a lot of advertisements maybe because one is we've just completed 10 years at the moment. So literally yesterday was our 10th anniversary of this fund. It's clearly a phase where companies in the whole infrastructure related space are now looking a little more promising. In this 10-year time frame, we've had two very extreme periods. The first 4 years were very, very strong for the fund. The next 4 or 5 years were pretty weak. Net, the fund has actually done quite well over the entire 10-year period, but investors probably would have had a slightly different experience depending on when they came in. But the point we're trying to make right now is that, with what has happened at a macro level, we are a lot more optimistic on the top down. India has always been a great bottom up story in any case in terms of corporates, but even with the macros improving, and I think we've made that turn 6 months ago already, so that will only get amplified now further by a new government in place. What it does is then it bodes very well for companies in this whole space, especially at a time where their valuations had come off a lot over the last 3 to 4 years. So that's why we've been talking about this fund, but it is a thematic fund at the end of the day. So we are also clearly telling investors that you can only invest a certain amount in a thematic category, but very confident of the performance of these type of companies for some time to come, which is why we're advertising it so much.
Okay. Well, since you spoke about the economy turning, what are you looking at in terms of returns at an index level, say a 12-month or 24-month forward? What kind of earnings growth, therefore, do you pencil in, and valuation re-rating as well?
Sure. So, as we've seen, Lata, every year our sort of standard analysts plant their flag at about 15% earnings growth at the start of every year. Typically, that's been the trend.
That's where you start.
And we've seen that over the last 4 years. And what we've ended up with over the last 4 years is we started with about 15% earnings growth expectation and ended up at about 8% typically. So there have been consistent downgrades occurring over the course of the last 4 years. I think even now, going forward, we'll pretty much start with 15% earnings growth, but I think we're now in the cycle where we might actually outperform that number, if not at least achieve it.
So
we're going to a phase where, for the course, I'm saying over the next 3 years, 15, 16, 17, if you just take a period of time, I think it's quite possible that we'll get a compounding earnings growth of 15% plus. Now, our expectations from equities, therefore, would be for them to at least perform in line with earnings growth. This doesn't assume any further re-rating. And of course, it is still a very stock-specific market, so you can pick and choose, and I'm sure there will be stock performances that will be at considerable variation to that 15% number. But as a market as a whole, I think a 15% type of compounding now with earnings also coming back and potentially surprising, I think is a fair assumption to make over a 3-year period.
Actually, our viewers want you to pick stocks for them. We have our viewers writing to us from our Money Control website. I have a question from Kamar Yadav. He writes to us from Bareilly. He wants to know which is the best stock to buy from the banking sector. If you can't name, give us some analysis of your banking stocks.
So, Lata, we can't name stocks. We're not allowed to as per regulation. But what I could say is within the banking sector, I think we still like private sector banks. I think there's still a very strong structural story there. There will be some capital raises along the way which will even further help them because of good valuations. So we're still very bullish on the entire private sector bank as being good consistent performers over a period of time. And banking as a sector is close to I think close to 25% or a little more than that of the index. So if we're expecting overall earnings growth of 15%, banking will be a key component of that.
All right, Anup, we'll leave it at that. Thank you for being with us and giving us your views. By the way, is there any team that you're supporting this time in the World Cup?
No, well, sitting here, hopefully some of the Latin American teams will do well. So we're hoping.
That is a fun manager answer.
That's an easy choice. I mean, in South America, what more can you expect?
You can
right?
name countries. We are not asking you to name stocks. Is it Argentina? Is it Brazil?
No, it's. I'm not. Very strong in terms of a football fan, but I think I'm looking at either Argentina, hopefully Argentina.
All right, there you are. I mean, I think you're as curious as any. Thanks a lot, Anup Maheshwari, for joining us with your thoughts. But we're not